Hey everyone, the market is still hanging around this zero gamma exposure notated by the blue line here on our chart. We're continuing to trade in this extremely narrow range as we've been discussing. One of the things we pointed out in Discord today is there's two distinct ranges here that we've been trading in on the SPY for both September and October. During the month of September, we were basically between the 565 level and 575 level for 4 straight weeks, essentially. And as we jumped up into the first week of October, we moved into this 575 to 585 range and have basically just been trading within this zone for the last several weeks. And you'll notice the market often does this right around these large gamma exposure levels, especially during consolidation periods leading up to major events like quarterly earnings, or for example, the presidential election that's coming up next week. And so obviously we are in one of those periods now. This has been great for theta decay. It's been great for premium selling strategies. A lot of the traders in our community Discord have been applying these kind of strategies and have really been raking it in. So really nice to see that. And so just switching gears here to our GEX levels, these are the major levels that we're watching both on the downside and the upside. We're kind of wondering as we enter into November, as we get through Q3 earnings and the election, could we move up into this zone here and have basically a zone through the end of the year? Our base case is that this is the most likely scenario just based on the gamma exposure setup. However, that doesn't mean that the risk is completely gone for a move lower. And so that's something that we definitely want to be able to watch and hedge against. Sean, what have you been watching when it comes to the broader market?
Yeah, so I'm on our website, Anthony, and I wanted to take a look at IWM. I have the gamma exposure dashboard pulled up with the gamma levels chart, and I'm going to scroll down and look at this historical gamma picture. Even though gamma technically is slightly negative, it's within our range that we would consider neutral. If you look at IWM, the last time it was positive by a large degree, relatively speaking, back on October 16, well, that was basically a day away from the top. So anyway, going back to the gamma picture, so IWM, we're kind of at the zero gamma line. We have this big cluster that's still at 230. And I guess from a timing perspective, what I like going back to this chart, I left this trend line up here for about the last week and I haven't changed it. And you can see how well price is respecting this line even now. And what I like is that today, in fact, we just saw a little bit of a poke above the whole moving average at 221.67, and we closed above it by a few pennies. And one of my rules of thumb is if we close above the whole moving average, then the bias tends to be to the upside. And you can see it's held pretty true with IWM as well. So I think there's at least a chance that we see this thing move toward that 230 G1 gamma cluster level that we've been watching.
Thanks for that, Sean. Yeah, IWM definitely one to watch. Another name we've been watching that just reported earnings after the bell today is Google. Google is trading up over 4% in the post market here, trading up towards the 180 level. And we mentioned Google several times in the past week. Basically, there was a resistance that's formed here around this 170 strike, which is also just happens to be the zero gamma line. You can see Google really been struggling down here for the past couple of months. But one of the things we mentioned is that post earnings, if we can get through this resistance level at 170, the 175 to 185 levels will become much more interesting because that is where all the gamma exposure is concentrated. We tend to stay away from earnings plays just because trading options with expirations 90 days or less, earnings are just too big of a gamble and we really don't have an edge. However, a lot of times price does go right towards those gamma exposure levels, and in this case with Google, that definitely happened today. And after hours, we're trading right here just under the 180 strike. Going forward into the rest of the week, I'm going to look for a tag of this 180 level, hopefully some sort of retracement back down to 175, and that could set up for a decent entry point back into some of these higher gamma exposure levels. So that's definitely going to be one we're going to keep our eye on.
Yeah, thanks, Anthony. So I wanted to look at United Healthcare. What I like about the chart is that even though we've had some selling recently, we are still above the whole moving average. We saw this rebound kind of crossed over, and it's been holding that even though the average has been declining. I've seen this happen before, not that it'll happen this time exactly the same way, but a lot of times once we cross over, it may take a few days, and then all of a sudden you get a big spike higher. So, but let's take a look at the gamma picture, see if that matches up with the chart. We do have positive gamma. We have this big gamma cluster at 600. Now, I looked at our 3D chart, and we do have some negative gamma that's expiring Friday at 550, which is only about 2% below where we're at. So not a significant amount of downside if that's going to be, the worst case scenario target here. We do have some lower gamma clusters here for Friday, but we also have some that are a little higher, 570, which would be, that same roughly 2% to the upside, 575. And that 600 target that we looked at, which is, even higher up there, is basically at November 15 is the largest cluster. So I guess, what I would conclude looking at that is it might take a little bit of time. We just don't know. It might take a couple of weeks, but this 600 target looks solid with the current gamma picture on UNH.
Next, I want to take a look at gold. GLD, the gold ETF, has been trading straight up basically from the 240 strike for the last 2 weeks, now at the largest gamma exposure concentration at 255. Today, I noticed over 30,000 contracts traded at the 260 strike. So market participants appear to still be bullish, still expecting further upside into the November and December OPEX. We've been waiting for a pullback for the last week here in GLD. Really haven't got anything significant. I'm hoping we can get something in this 252 to 253 range, somewhere in here, maybe a pullback down here. That would be a great risk reward entry point for then a move back up to the 260 level. Of course, that's not guaranteed to happen, but we like to enter long positions or long plays on pullbacks where we think the trend and the gamma exposure are both pointing upwards. That typically gives us, the best bang for our buck. We're already playing SLV, the silver ETF, and are really looking to add a GLD position as well here in the coming days. Don't forget, if you guys are interested in accessing our gamma exposure and option flow dashboard, head on over to geeksoffinance.com. We're actually running an election day special. There's 3 spots left if you want $300 off our yearly subscription. Check that out. We've got the promo code here at the top. Also, definitely check out our community Discord. There's a ton of great traders in there sharing information and data every single trading session. Absolutely free to check out. I'll put a link in the description below. Thanks so much, everybody, for watching. We'll see you guys in the next video.